Um, I think I probably have everybody muted. And actually, I don't think anybody. I think it's a webinar and not a meeting, so I'm pretty sure people don't have the ability to talk. But I do want to encourage all of you as I'm going through the presentation. If you have questions or if you want, to clarify anything or add some 2 cents or whatever, please put it in the chat box. You can either direct it to just me, or you can direct it to everybody in the chat box. So I encourage you to do that. I try to keep everything very, very interactive. Again, my intention is I just want to share my information. I'm passionate about investing in general because that's my industry. That's what I do for a living. And I'm super passionate about options trading. So some of you might be familiar with options and some of you might not be. We're going to talk a little bit about that in the session today. And then thirdly, I'm super passionate about Bitcoin and cryptocurrency and blockchain in general. So it's kind of like, 1, 2, 3 for me. So I'm excited to be here. I want to thank you guys for being here. And let's get started. So this session is probably going to probably be no more than an hour. And what I want to do is I just want to share my information and answer any questions that people have and kind of go from there. Okay, let's get started. So Bitcoin, what we're going to talk about today is how to use options to create income on the Bitcoin that you might already own. And if you don't already own Bitcoin, that's okay too. You can buy Bitcoin, you can sell options against it. I'm going to talk a little bit briefly about what Bitcoin is, what cryptocurrency is, and then how you can really, drive some performance in the investment world using options. So hit me up in the chat box and let me know if you have Bitcoin already. If you haven't traded Bitcoin before, if you were familiar that you could even do options, maybe you don't know what options are, but I'm going to try to touch on all of that. It's helpful for me if you guys put some information in the chat box, just because I don't want to bore anybody with information that they might already know. I don't want to talk over anybody's head, that kind of thing. So I really want to direct the material, the content, and I want to make sure that it's relevant for everybody. Okay, so we're going to get started. Let's see. Bitcoin. So here's and I think you guys can all see my screen, and just let me know in the chat box if you can't for whatever reason, but I think you can hear me and see my screen. Basically, this is kind of like I just copied and pasted from online. It was like Wikipedia or something like that. Bitcoin was really the first cryptocurrency to record transactions. So Bitcoin started around 2009. It didn't really get popular until a couple of years later. This is some, really text that it doesn't even matter. So I'm going to just skip to the next thing. Basically, just to be relevant, Bitcoin is a cryptocurrency, right? And blockchain technology, I look at blockchain as kind of like how the internet was when the internet first started. And it was like the internet, oh my gosh, I'm 47. I don't know how old you guys are, but when I was young, there wasn't the internet. And I remember when it first started and how quickly things became like, oh my gosh, you can Google this and you can Google that. And now, like today, I can go on YouTube. I can find any piece of information. I don't need to go get like an encyclopedia for my kids for school or anything like that. It's just incredible how you think of, how fast the internet kind of, came to us and how fast things are moving. And I look at that, in a similar way relative to blockchain. So blockchain technology, what is it? It's like a decentralized public ledger that's used to record transactions. So basically, it's not like, when you keep your money in a bank, and I'm definitely not suggesting that anybody replace the US dollar with Bitcoin or anything like that. So don't misunderstand me. But what I am saying is this: when you keep your money in a bank, the banks have the ability to really leverage all of their deposits, right? So for example, let's say if you have money in, I don't know, Chase Bank, Bank of America, or wherever, it doesn't even matter, big bank, small bank, if everybody wanted their money out at the same time, if something happened, some sort of world event and everybody wanted their money out at the same time, the bank would not even have enough money to pay everybody out. And it's kind of crazy when you think about that. It's crazy that the government allows that sort of, structure. But that's kind of how it is. And again, I'm not suggesting that you change things, but what I am suggesting is that we live in a day and age where things are kind of crazy. We look outside and we see all this, COVID stuff, and I'm not going to get into any of that or politics or anything, but I can say that when you talk about a blockchain technology, a decentralized public ledger, it's not like, your money is your money, and nobody can close it or take it away or turn it off or not have enough money to pay you. It's kind of like a cool thing. So Bitcoin is just a currency, and you can use it for a variety of things. Now, I personally have started investing in Bitcoin, I would say probably about 3 years ago. I don't use it to buy anything, but you can actually use Bitcoin as a currency to actually pay for things. And I don't know, some of you guys might be surprised to know that you can actually pay, bills or, purchase product with some of these companies. AT&T, Overstock, Expedia, Subway. Subway started using Bitcoin a while ago. PayPal, Newegg, Shopify, Microsoft was probably one of the first as well. You can buy a Tesla. You can buy a Tesla car with Bitcoin. Personally, I don't use Bitcoin in order to purchase anything with it. What I do use Bitcoin for is I use it as like an uncorrelated asset. So some of you guys are from the Tony space, and you've heard people like Ray Dalio, big hedge fund, super smart hedge fund guy, speak. You might have heard him speak, and he talks about having uncorrelated assets. In other words, if you have a bunch of stocks, they're all kind of correlated. One stock goes up, they all kind of go up. The tide rises, all boats rise. It's kind of like that philosophy. But really, people should have uncorrelated assets in their portfolio. You should have, some stocks, some bonds, some real estates, a variety of different things. And so cryptocurrency is just like one of those uncorrelated assets. Another cool thing about Bitcoin is that it has a finite number of coins to be created. So it's kind of like we think about supply and demand. And if we think about that, it suggests a future price increase. So Bitcoin, I have a slide, the next one, and I'm going to show you some of the performance that Bitcoin has seen in the past. And some people think, it's funny, I was talking to a friend of mine the other day, and he was like, I think I missed the boat with Bitcoin. And I'm like, you know what? You definitely did not miss the boat. I think it's like $9,500, maybe $9,600 today per coin. People talk about it going up to 100,000 plus. So it's really one of those investments that you can make a lot of money from. And basically the way you want to look at it is that instead of trading a stock or a currency or a commodity, you're just trading a cryptocurrency. So it's very similar. I had a conversation with an investor recently, and she was like, why, like, what's the point? Why buy Bitcoin? And for me, different people might have different reasons, but for me, the biggest thing is really, instead of like buying Apple stock, or actually really not instead of, but in addition to buying Apple stock or buying, Amazon or whatever, basically what you're doing is you're buying, cryptocurrency in addition to that. And Bitcoin is one of the, the leading cryptocurrencies there is. It was one of the first, it's the major one out there. A couple of the other popular ones are Ethereum, Litecoin, Ripple is pretty popular. And then you have a whole bunch of altcoins, they call them. There's certain coins that are ICOs, initial coin offering. You have to be super careful. I will say that cryptocurrency in general is one of those spaces at the moment that really doesn't have any, regulation. And certainly not any regulation like the stock market has regulation or something like that. So it's kind of like, people talk about it being like the wild, wild west. You have to be super careful, what exchange you use, who you trade through, because there's a lot of, things that can go behind the scenes that you might not anticipate. But basically, it's just the same as buying stock or trading options on, Apple, something like that. Let's look at this is a really cool chart. And what I did was I just Googled the other day, 10-year performance Bitcoin. And this just kind of shows you, oh my gosh, like it made 99,999%. So it's so big, it didn't even, calculate. On the next page, I kind of put together, okay, if you invested $1,000, a few years ago, how much would you have? So let's talk about that for a moment, because I'm really, really excited to share some of this information. And don't look at it from the sense of you missed the boat. No, I definitely don't agree with that. But let me tell you just a couple of facts about Bitcoin. It started in 2009. It really started to take off in 2013. At that time, it was worth $13.50 per coin, right? If you invested $1,000 back then in 2013 at 13.50 per coin, you'd have 74 coins, right? I'm just rounding things off. Today, I put this these slides together a few days ago, and at that time, one coin was worth 9,200. I think I looked recently, and I think it's actually a bit higher. Bitcoin price, if you just Google Bitcoin, yeah, 9,600. So it definitely, changes pretty quickly, and it can change pretty quickly. But basically what that means, guys, is that if you invested $1,000 back in 2013, today you would have 680 grand. And then this is a little bit dated, it's a little bit higher now that it's worth a little bit more. And actually it's funny, like a couple of years ago, Bitcoin was almost 20K per coin. So if you, let's say, invested in 2013 and you sold in 2018 or something like that, somewhere in that neighborhood, you actually would have made like 1.2 million bucks or something like that. Rate of return, 67,000, almost 68,000% over a 7-year span. That's really, really cool. Who's excited about that? Hit me up in the chat box and tell me who's excited about that. I know I'm excited about that. So let's talk about options a little bit. Okay, let's see. I'm just going to read some of the chat. I'm new to the whole investment, and I don't know anything about options. That's cool. So I'm going to talk about options right now, actually. And again, I want to keep everything sort of interactive. If you have questions, please, put a note in the chat box, ask me to clarify, because I want everybody to walk away from this session and say, oh my gosh, I didn't know you could do that. And that sounds kind of cool to me. So that's really my intention. What are options? Options are basically the right, but not the obligation to buy or sell something at a certain price before or on a specific date, right? So the predetermined price is also called the strike price. I'm not going to get like technical and confuse anybody with terms, but basically that's kind of how options work. I truly 100% believe that options are probably the most amazing asset class or type of investment in the investment space that anybody can invest in. So options are what we call like derivatives. They trade based on like the underlying price. And a lot of times I come across people that, are perhaps like confused by options or scared of options, or they've heard maybe negative things about options. But really, once you understand how options work, and I'm going to talk about this in this session, and hopefully you guys are going to grasp exactly the concepts that I give you. Once people understand how options work, everybody should trade options. Let me say that again. Everybody who's investing for themselves and has a portfolio, in my opinion, should be trading options. Now, do I mean that you should put 100% of all your money in options? No. I mean, you should never put 100% in anything, right? Like, look at companies that, look at Lehman Brothers, look at Enron. There's lots of things that you can say, if you put 100% all your money in, you lose all your money. So you do want to diversify for sure. But everybody should be trading options once you understand how that works. And hopefully what I do is I'm going to do an amazing job explaining that, because it can be a little confusing, but I'm going to try my best. And please, if I'm talking too fast or if you want me to clarify, please put in the chat box. So that way I can kind of, explain it to everybody here. Okay. So let me start off with talking about options and options. This is, I think, the easiest way to understand how options work. Options are kind of like insurance. And let me explain to you what I mean by that, right? In today's day and age, you have insurance for everything, or lots of things anyway. You have car insurance, you have homeowners insurance, you have medical insurance, you have health insurance, you have cell phone insurance. If you break your cell phone, you can insure your cell phone. There's lots of different things that you can insure, right? And what is the purpose of insurance? Insurance is like the shifting of risk from one person to someone else, right? So basically, let me explain what I mean. And I'm sure you guys get this, because everybody who is on this call, I'm sure, has at one point or another, and probably today, participating in insurance, right? So basically, I have a car and I drive my car, and I'm not talking about liability insurance. Of course, that's required, but let's talk about physical damage. Like if I was to smash my car, if I was to have a car accident, if somebody was to steal my car, I don't want to be out, the value of the car. So what I do is I buy insurance. I buy collision insurance. I buy comprehensive insurance. And what I'm doing is I'm paying a premium right? An amount of money, a specific set amount of money for a specific time frame, let's say 6 months or 1 year. And what I'm doing is I'm shifting the risk for myself over to the insurance company. So let's say my insurance, my car insurance just went up. It's like, I don't know, $8,000 a year. Super expensive. I had an accident, a couple tickets, and a couple cars. But what I'm doing is I'm paying $8,000 to the insurance company for a 1 year term. Let's say it starts tomorrow through the next 12 months as an example, and it's $8,000. And if I have a car accident, regardless of whose fault it is, the insurance company is going to fix my car. And basically I pay my deductible. If I have a deductible, I do. Some people don't, but basically that's the way that works. Now, what happens if you don't have a car accident? Does the insurance company give you back your $8,000 that you paid? Hit me up in the chat box and tell me what you guys think. So in other words, you pay for car insurance, and I want you guys to be interactive. So please, please, please participate here. I don't want you to just like be listening in the background. Nope, absolutely not. No, no, no. So of course the answer is no. So you pay $8,000 a year for car insurance. And if you don't have a car accident, and thank you for the participation, by the way, thank you. If you don't have a car accident, that's great, because obviously it's great you didn't smash your car, but the insurance company does not give you your money back. And in fact, the insurance company is probably saying in the background, yay, our statistics are working, and the purpose of an insurance company is to take in more money than what they spend in claims, right? So they're taking in more premium than what they pay out in claims, and that's their intention. So that's kind of how car insurance works. So options are kind of like the same, right? So you can have, some people might own, and this goes for stock options, and it also goes for Bitcoin. Now, Bitcoin is a little bit newer because it's like this newer asset class. It's not, certainly not as well known as like, Apple stock or Amazon stock or something like that. But I'm sure at least some of you might be familiar on the call that you can buy insurance on your stock. So let's say your grandma passed away and she worked at General Electric for 50 years, and she, passed away, and you inherited, 2,000 shares of General Electric. I'm just giving this as an example. And that's great. And you can have your stock, but you might be thinking to yourself, well, I want to buy some insurance in case the stock crashes, right? Like, I don't know what's going to happen. It's an election year and the market's kind of funny and all this COVID nonsense going on. And what if the stock crashes? I don't want to lose all my money. Very much like, what if I crash my car? I want to lose, the value of the car. So it's the same thing. So somebody that owns, let's say, General Electric stock, they might buy a put option on their stock. And what they're doing is they're paying a premium to somebody else. And that other person is saying, okay, if your stock crashes, if your stock goes down in value, I'm going to buy it from you so you don't lose all your money. So that's kind of how options work. So it's kind of like the concept of insurance. People buy options because they want to shift the risk from themselves over to the insurance company, let's say. And then the cool part about options is that all of you people on this call, and me and anybody, can actually sell options and act like you are the insurance company. It's amazing. So I want to talk about this as we go, but that's kind of like how options work. It's kind of like insurance. And the way it works is buyers are paying the premium and sellers are collecting the premium. So people that buy insurance, people that buy, Bitcoin options or stock options or whatever options, they are paying a premium. They're shifting the risk over to the insurance company. And people that are, the other side of that transaction, they are the sellers of those options. They are collecting the premium just as if they were the insurance company. So it's a very, very cool concept, right? Now buyers, like a lot of times people ask me, who buys a stock option? Who buys a Bitcoin option? Buyers could be hedging their position. Like I told you before, like as an example, you inherit 2,000 shares of General Electric from your grandma, and you don't want to lose all your money or all that value in case the stock crashes. Bitcoin is the same. Let's say, you bought 10 Bitcoin a long time ago, 5 years ago, because you heard it was kind of like, the next best thing. And what if Bitcoin crashes? You don't want to lose all your money. You might buy a put option and protect or hedge your position, right? also, sometimes people buy insurance in case they just want to they want to like 10x their money. They want to get like asymmetrical return versus their risk. What do I mean by that? Well, let's say somebody thinks Bitcoin is like an amazing thing, and they might want to participate in Bitcoin, but they don't want to, let's say, buy a Bitcoin, right? Um, you know, you don't have to buy a whole Bitcoin, by the way. You could buy fractions like 0.01 of a Bitcoin. So you can invest, you can buy $100 worth of a Bitcoin. You don't have to buy a whole thing, but, just to move along with my example, let's say somebody doesn't want to put up money and be subject to losing it. They might want to buy what's called a call option, and they put up a very small amount of money and they buy a call. And if they're correct and Bitcoin goes up significantly in price, they could turn that $100 that they just spent on that option into like $1,000 or more. You know what I mean? So they can actually 10x their money. So they can, turn that small amount of money into a very large amount of money, because options uses what we call leverage. Leverage is an amazing thing, and leverage can be really good. Obviously, you have to be careful with leverage at the same time, because it's kind of like, leverage is kind of like, I like to use these kind of like examples, right? Leverage is kind of like having a house and having a mortgage on it, right? So like back in 2007, I remember people, I think the president was like on the TV saying everybody should own a house. Everybody has the right to own a house, or should have the right to own a house. And people were buying houses that really couldn't afford a house, right? So they were taking out, let's say, ARM type of mortgages, where it stays fixed for the first, 1 year, 2 years, 3 years, or whatever. And then their mortgage went up significantly, 3 years from then, and they couldn't afford the payments. So that's like leverage. So you can use it and have it be negative if you're misusing it, perhaps. But at the same time, most people wouldn't be able to afford a house if they didn't have the ability to, obtain a mortgage. So leverage is kind of like the same thing. So like when you invest in this is very similar in the stock market, and it's the same in Bitcoin as well, which is why I'm so excited about this particular program, because people don't realize that it works with Bitcoin. But you can use leverage to actually trade. So that's, via using these options. You can purchase a call option. You can also purchase a put option. And again, I don't want to get too technical. What my intention, is that, because options can be very confusing, right? And there's, oh my gosh, what's a put? What's a call? What does it mean when you buy or sell, or what's a strike price? What's an expiration date? And all these different things, what I'm trying to do is like get the concepts across to people, right? Because the concept is the most important thing. And then certainly, like I said, if you want more information, hit me up at the chat box here. There's going to be a follow-up program to this program if you want more information, that kind of thing. But this particular session is going to be like an hour. So obviously we can't talk about, everything. But that's kind of how options work, right? So you can actually 10x your money. Now, here's the thought process between buying and selling, right? I'm going to take a moment and talk about that for a minute. Buyers of options, and this is for Bitcoin or stocks, in my opinion, there are like lots of ways to make money in this world, right? Like lots of ways to skin a cat, you might say. And you can make a lot of money, perhaps buying options, but buying options are kind of like, going to the casino, and I want to go to the casino and I want to, play a slot machine, and I could put $100 in and I could make 1,000 because might hit the jackpot. But statistically, the likelihood of that happening is very small, right? So it's always about statistics. I could go buy a lotto ticket for $1 and I could hit a jackpot for $1 million or whatever the jackpot is, but the likelihood of that happening is very, very small. Bitcoin options, stock options are very much the same way. If you buy an option, you're putting up a small amount of money. You can make a large amount of money, but the statistical likelihood of that happening is very small. I focus primarily, and I teach people, and I talk about people to people about selling options. You want to be the insurance company. You want to be the actual casino, where you're using statistics and you're taking in premium, and then you're only kind of like as if you're a car insurance, you're only paying out, claims if someone smashes their car. It's kind of like the same, concept. Let me know in the chat box if that makes sense. If it doesn't make sense, I'm going to talk obviously more in detail as we go. But I just want to make sure that you guys are grasping so far the concept of what options are. Linda. Linda makes sense, of course, because she's in my options program. Very, very cool, Linda. Sellers, when you sell an option, you can create yourself a money machine. So, I mean, it's funny, like this is kind of a cool photo. Obviously, it's not exactly like, you know, cranking out bills, but basically when you're selling options, you're taking in premium, and what you're doing is you're saying, okay, if that Bitcoin goes down to that price, I'm going to buy it at that price. If it doesn't, I'm not going to buy it. But either way, I'm going to keep the premium that somebody pays me because I'm taking the risk, right? I want to be a money machine. I want to be a money machine too. That's the bomb, right? Passive income, like multiple streams of income. That is like the name of the game. That's important stuff. And it's not for just like these cash green dollar bills. It's like, you know, I know most of you guys are probably Tony people on this call, although not, you know, some people might not be, because I did put this on my like personal Facebook as well. So some of you might not even know, like maybe you're thinking Tony who, but anyway, you know, really we don't invest. We don't try to create money because we just want like, you know, some green dollar bills in our pocket, or we want to look at some number on the screen that says we have X dollars. We want to use that, you know, to have a better quality of life, to do things with the people that we love, that kind of thing. So that's important. You know, not to be corny, but I just want to throw that out there. It is the why and why we're doing something. So that's super important. As we're talking about options, I think it's important, and we're talking about like buying options, selling options. Buyers are consumers. They are buying the car insurance, right? They are playing a slot machine at the casino or playing craps at the casino. Now, you know, do casinos make money or players make money? Well, who do you guys think? Do you think that, I've talked to people before, and sometimes and friends even, which is kind of funny. They have said to me once in a while, you know, hey, I go to the casino and I always win. Oh my gosh, I am so lucky. I mean, that could be great, and it could be the case, but statistically speaking, if you go to the casino, and frankly, the more times you go to the casino, you will lose, right? Because that's how statistics are. So like a slot machine, for example, has a setting on the inside that says, okay, they're going to pay out, you know, let's say 40%, and they're going to take in 60% or whatever that number is. So the more money that flows through that slot machine, the more money the house makes. Absolutely. Somebody said the house always wins. That's 100%. Do you think that places like MGM Grand, Caesars, or whoever, do you think that they have these posh, you know, resorts because they, you know, lose money and because they're paying out like millions of dollars to these whales? Absolutely not. I mean, of course they pay out money. It's just like car insurance. Insurance companies will pay out claims, you know, to people that smash their car, people that their house is burned down, or people that pass away, life insurance, that kind of thing. But what they're doing, what the insurance companies are doing, and what the casinos are doing, and this is important, I want you guys to listen to this, what the insurance companies are doing and what the casinos are doing, they are using statistics to develop likelihoods and take in more premium than what they are going to pay out. That's why when you sell options, it is so amazing, because you are becoming the casino, you are becoming the insurance company, and you're using statistics to make the most educated decisions. I know some people are like raising their hand. I don't think the audio works on you guys because it's a webinar. But if anybody has any questions, Lenny, if you have a question, just put it in the chat box here, and I will definitely address that. Or maybe you're saying high five. Could be. I'm not sure. So for sure, you know, you want to sell options, in my opinion, and not specifically buy options. That's what I'm going to talk about today. That's where the magic is. That's where the power is. When you sell an option, you choose what price you want to sell your Bitcoin for. So you can, let's say you have, I don't know, you bought, even if like you bought, or maybe you didn't even buy, you want to buy a Bitcoin now and then you want to sell an option against it. You could do that too. But let's say, I'm just giving you guys good examples for the sense of understandability. Say you bought a Bitcoin, one Bitcoin 5 years ago, and it was $4,000 or something. Now that Bitcoin is, you know, 9,000, 9,600, I think it is right now. what you can do is you can sell a covered call against it. It's kind of like Airbnb your property. And you could say, okay, you know what? I'm going to take in some money from a buyer. And if my coin is 10,000 bucks before, I don't know, August 1st, I'm going to sell my coin for 10 grand. If it's not, I'm going to, not sell my coin, and I'm going to keep the premium. It's like the car insurance company. So these are like you have to understand the analogies first and the concepts. Car insurance, if you don't smash your car, the car insurance company doesn't give you your money back. This is the same. When you sell an option, if the price doesn't go, like higher if you're selling a call, and you get to keep your Bitcoin and the premium. So you're not subject to paying out any money. So it's a very, very, very cool thing. You can also say, you know what, I want to buy a Bitcoin for $4,000, $5,000 if it drops to that price. If it doesn't drop to that price, I don't want to buy it. And you can take in money, premium, for that commitment. I'm going to talk about that more in a couple of slides. But basically, like, the point that I'm trying to make is you choose what price you want to sell your Bitcoin for, or what price you want to buy Bitcoin for, and you choose the date on which you want to make the trade. It's kind of like car insurance. You could choose a 6-month policy, or you choose a 1-year policy. I'm going to do a 6-month policy, and then maybe I'll have a ticket fall off, after 6 months. And then I might pay a cheaper rate after 6 months, kind of like the same thing, right? So let's talk about, there's two main ways that you can make money selling options. And this is for Bitcoin or stock options. But the cool thing that I'm talking about today is for Bitcoin, because a lot of people didn't even know it existed, which is amazing. Who knew on this call that there were Bitcoin options? Raise your hand or put it in the chat box. Anybody know on this call that Bitcoin options existed? Let me know. No idea. Did anybody know that you could do Bitcoin options? Let me know in the chat box, but so far none of you have known. So that's why I'm happy that I'm doing this. So let's talk about the two main ways that you can make money with Lenny knew. Okay, well, Lenny, you're a smart cookie. I know you had a lot of good questions in my options program. Very cool. Jay did not know. Brad, I thought there might be, but I didn't know there was a decent market for it. So that's a good point, Brad. I would say the market is not as good as like the stock market, because it's still kind of new. So what do I mean by that? And I don't want to get too detailed and confuse anybody, but basically, people are buying at the ask price or selling at the bid price. And oftentimes, like, let's say if we trade Apple, Apple trades, we say that there's a very thin spread between the bid and the ask. So people are, there's not a lot of money that the market makers are making on the spread of Apple, because it's so popularly traded, right? So Bitcoin is not as popular. There are a few exchanges that do Bitcoin options. I'm not going to go into who does it and who doesn't. I do have another kind of platform for that. But for sure you can still make money, but it's not as I would say not decent market. It's not as popularly traded. So you have to give up some of it's kind of like paying a higher commission, when you're selling something or buying something, basically, but you could still make a lot of money. So let's go through the two ways that you can make money selling Bitcoin options. So first of all, I'm going to talk about selling a covered call. So selling a covered call is in Bitcoin, it's the same as selling covered call in, well, maybe not same. I'm going to talk about the differences in a moment, but it's very similar to selling a covered call in a stock like Apple or Amazon or whatever. You might already own Bitcoin, and even if you don't already own Bitcoin, you can buy Bitcoin right now, and you could sell a call against it right then and there, right? Well, actually, typically you have to wait, until the trade settles, until the next day. That's a little bit of a difference between Bitcoin and stocks. Again, I don't want to confuse anybody with minutia, in the weeds kind of details, but basically, you could already own Bitcoin and then sell a covered call against it, or you can go buy Bitcoin and sell a covered call against it. What do I mean by that? I like analogies, right? So let me give you an example. I have a house in the Virgin Islands. I live in LA, California, and I also have a place in the Virgin Islands. I used to live in the Virgin Islands full time. I don't live there anymore, but I have these 3 apartments, these 3 units that I rent. And it's kind of cool because like I could fly back there and I can use the house or any of those units. And then when I'm not there, I rent it out on Airbnb, VRBO. So I own the property, and then I take in pieces of income for other people using it. Covered calls are kind of like the same thing. You already own Bitcoin. Why not make some more money from it? Why own Bitcoin and just like look at it on a freaking computer screen? Oh my gosh, I bought it at 5,000. Now it's worth 9,000. Oh, that's great. No, people want to drive cash. Cash is king. Cash is what drives your lifestyle and creates, income for you to spend with the people that you love, doing the things that you love to do. Like I think, people put too much emphasis on, hey, I have this account at Merrill Lynch or whatever, and it's worth like X dollars. Who cares? It's all about the money that you make from those investments, right? Absolutely. So I have some comments here, totally in agreement. Let me know if you don't agree. But I think everybody will agree. It's like you want to drive income from your investments. Income is like cash in your pocket, right? Yeah, absolutely. It needs to get to work. So if you already own Bitcoin, you can sell a covered call. What does that mean? So let's say, wait, what is Bitcoin right now? Bitcoin is 9,600, right? 9,613. This changes all the time. But basically 9,600. So you can say, okay, I am going to buy a Bitcoin right now, or a fraction of a Bitcoin. You don't even have to do a whole Bitcoin, people. You can literally invest in Bitcoin options with as little as like $100, believe it or not, which is it's incredible. Everybody should be investing in options, in my opinion, and everybody should have some Bitcoin, in my opinion. I mean, why would you not want Bitcoin? It could be like, hey, what if you had the opportunity to invest in Amazon before it jumped to like $2,000 a share? Like wouldn't you have liked that? That's what Bitcoin can do for you. Even though it's already like $9,000, it can go way higher, and you can buy it and you can drive income off of it. So let me get back to selling covered call, kind of like Airbnb. What you do is you own a Bitcoin, you sell a call against it. You choose the strike price. What do I mean by that? I mean, you choose the price at which you want to sell your coin. So you say, okay, I bought it at 9,600 today. I want to sell a $10,000 Bitcoin. Only if it reaches 10,000. If it doesn't reach 10,000, you don't sell it, and you keep the premium that you got. You also choose the expiration date. So you can say, okay, I want to, I want the contract to last until, August 15th or September 15th or whatever. You can't pick arbitrarily any date. Like it has to be, there's certain dates that trade, and as I think Brad alluded to, it's not the same kind of market as it is for stocks. So it's not as you could do Apple options, that expire every single Friday, as an example. You could do S&P index options that expire like literally 3 days a week, Monday, Wednesday, Friday. So Bitcoin is not necessarily the same thing, but still you can make a lot of money from it. So you could say, okay, I'm going to buy a coin today for 9,600, and I'm going to sell. Actually, I think I have an example. Let's just go to an example. You own a half a Bitcoin, right? Let's say you put up 4,600. I did this when it was trading at like 9,200. It was a few days ago. You buy a half a Bitcoin for $4,600. You sell 50 contracts. So each contract with Bitcoin is kind of cool. You do these pieces. It's not like one contract is not one Bitcoin. No, you can, one contract is 0.01 Bitcoins, right? So what you're doing basically is you're selling 50 if you have a half a Bitcoin. And what this is assuming is that you bought, a half a Bitcoin at 4,600, assuming a full Bitcoin is worth 9,200, and then you're going to sell a 9,500 contract that expires July 31st at the end of this month. So when I put these slides together, it was 11 days out, right? So mathematically, these are legit numbers. You would have taken in $57 in premium. Some people say $57, who cares? $57, it's not about the dollar value, it's about the percentage. So who cares about the dollar value? You have to calculate, like, what's your rate of return percentage wise. Mathematically, if you're putting up $4,600 and you're taking in $57.50, and if that contract expires worthless, meaning that, you know, 731 comes and Bitcoin is not 9,500 or higher, you keep your coin and you keep the premium. That means you just made 41.5% annualized on your money. Here's the math on the bottom there. It's just simple math. Who wouldn't want to make 41% on their money? Hit me up in the chat box if you don't think that that's a cool return. Woo-hoo, that's right. Absolutely. It's a fantastic thing. So the point is that you can already own Bitcoin, and you can make that asset work harder for you instead of just sitting on a computer screen where you're looking at the value. Why not drive some income from it? Now, some people say, like, what's the risk? What's the worst case scenario? Okay, let's talk about that for a second. The worst case scenario, the risk is that, let's say you buy this half a Bitcoin for $4,600, and then you sell this $9,500 Bitcoin contract. What happens is, let's say Bitcoin is, you know, $12,000 on 7/31, right? You've already contracted to sell your Bitcoin at 9,500. So you might have to give up some of the upside. So that's always going to be a risk. But, you know, I personally, when I talk to investors, most of the people that I talk to, they are totally okay with giving up some upside with, you know, some guaranteed income. So basically the premium that you're getting, you know, you get deposited in your account. You can use it right then and there. Again, it's cash in your pocket. It's kind of like having a cow and not just having it for, like, bacon if you're going to slaughter it, but you're going to, like, have it for milk also. So you're going to like take it, you're going to have it for the income as well as the asset. It's a very, very cool thing. Everybody that has Bitcoin really, you know, in my opinion, should be trading options, because you can create more income from yourself. And you could choose the strike price. Maybe you want to, you know, choose a higher strike price because you want to have, like, a very low likelihood that you're going to get assigned and have to sell your Bitcoin at that price. So you can sell a $12,000 or $15,000 contract. You can go far out. You can say, you know, September, October, November, December, you know, etc. So you have the flexibility to choose all those things. This is why everybody, you know, once you understand how options work, I mean, you get to pick, you know, how much you sell your coin for and what the expiration date is. Now, one of the big differences for those of you who trade stock options, one of the big differences between stock options and Bitcoin options is that Bitcoin options are what we call European settled. What does that mean? That means that, let's say in our example here, let's say Bitcoin goes up to 9,500, you know, on July 28th, and then it goes down to 9,400, you know, on July 31. You're only going to sell your Bitcoin if at the close on your expiration date, 7/31, if it's $9,500 or higher, right? So let me make sure everybody's clear and make sure everybody's, you know, good on this info. And again, hit me up in the chat box if you guys have questions or if you want clarification. But basically, when you sell a covered call, what you're doing is you're taking in premium. You keep that premium regardless of what happens. That premium goes in your pocket right then and there. You can spend it as cash, right? You get it. That's cash in your pocket. And what you're doing is you're saying, okay, if on the expiration date, if Bitcoin is trading at, you know, your expiration, your strike price, 9,500 in my example, or higher, you're going to sell your Bitcoin at $9,500. If it's not trading at 95 or higher, you're not going to sell it. But either way, you keep the premium, just like a car insurance. They don't give your money back if you don't crash your car. The same, right? Let's see, a couple questions here. You're saying it can't be exercised before settlement. That's exactly right, Jay. So Bitcoin, the way Bitcoin options are, they're European settled. It could only be assigned on the expiration date, at the expiration. And that's an advantage to a seller. Oh my gosh, that's amazing. Because with stock, and I do it for a living, I trade stock options, right? And basically, like Apple stock, let's say, you know, Apple's $350 and you sell a, you know, $300 put. Let's say it goes down to $250 and somebody assigns it and then it bounces back up. You know, they can assign, you know, on stocks. It's not common, but it can get assigned anytime between now and the expiration date. But with Bitcoin, it can only be assigned on the expiration date. Let's see. I was told that U.S. exchanges do not allow Bitcoin options. Is that true? Okay, so I'm not going to talk about like custodians, but I use it's not really U.S. exchange, so it's not like the New York stock market. It's more like I don't think they're called an exchange actually. I think they're more of like a like an over-the-counter firm or something like that. You can. I mean, there are a few different platforms. I think this is what you're asking, Lenny. There are a few different platforms that you can trade Bitcoin options. So I don't know exactly what you mean by that question. U.S. exchanges. The company that I use to trade Bitcoin options is a U.S. company. And I'm going to talk more about it in a moment in a couple of slides. But one of the best things about this company that I use is they don't even have any tax reporting. So Bitcoin is very, very new, and I'm not. Let's make something clear. So first of all, I'm securities registered, and I don't want anybody to get the wrong idea. I'm not coming on a Zoom call and saying, "Hey, don't pay your taxes or cheat the government" or anything like that. But what I am saying is that, you know, there is no tax reporting, not with the exchange, not with the platform that I use, the custodian that I use, in selling Bitcoin options. That means that you can take an income and not get a 1099. That, I mean, maybe that will change down the road. I'm thinking that probably will at some point, but right now that's how it is, which is amazing. It's fantastic. Let's see, major advantage. Wow, that's cool. Absolutely. So let me know, again, you know, keep it up in the chat box, you know, if you have questions or what your thought process is on this. So yes, major advantage. I think what you're referring to, Jay, is that that's European settled, and it can only be assigned on the expiration date, which is really, really cool. Okay, you can also, like what I mentioned before, is like there's two main ways that you can, you know, create yourself income from trading Bitcoin options. So you can sell a covered call, or you can sell a put, right? And let's talk about selling a put. Couple questions, which platform? I'm going to go through all the substance now, and then we're going to talk about that, you know, down the road. Will an account automatically flag the IRS to audit you? You know, I'm not sure. I don't think so. And again, I'm not here to say don't, you know, pay your taxes. Don't, you know, cheat the government. I just think it's a cool thing. You know, Bitcoin, it's funny, like, you know, for those of you who have Bitcoin, maybe some of you, I think some of you have it on this call, some of you don't, right? So it's like Bitcoin is like this decentralized kind of thing, and it's meant to be, or part of the attraction can be like this anonymous thing, right? So recently I started, I have a Bitcoin, I started this like passive income business with Bitcoin ATM machines, which is kind of cool. I just bought my first machine recently, and basically, you know, you put machines in stores like, you know, liquor stores or convenience stores, retail, so whatever kind of store, right? And a customer can put cash in and then get Bitcoin to their wallet out. And some people are like, well, why do you need an ATM machine to do that? Well, here's why. And here's part of the attraction is like, you know, Bitcoin started off as one thing, and then it kind of like morphed into something different with some, you know, exchanges or platforms or that kind of thing. Like Coinbase, I'm not going to talk about a lot about different platforms, but I will talk about like Coinbase as an example. Coinbase, if you have an account there, they just send all their data to the IRS. Now, I think that they were forced to do that, but they actually go above and beyond and provide, you know, all kinds of information to the IRS. And there's other companies that don't necessarily do that. So some people like more privacy, some people, you know, for whatever reason, you know, but part of the attraction to Bitcoin is like this anonymous sort of thing. And it's not like I'm promoting, you know, underground, you know, income or anything like that. Just take it for however I'm saying it. But let's move on. Let's talk about selling a put, right? So you could sell a covered call, you could sell a put. When you sell a put on Bitcoin, it's very much the same as selling a put on a stock. You get paid to commit to buy Bitcoin at a price that you choose if it drops to that price, right? You don't have to own any Bitcoin. So I want to be clear about that. Sometimes people say, you know, they get confused. Do you have to own Bitcoin? Do you not have, you don't, to trade options, you don't even have to own anything, right? You just have to have some cash as margin, basically, to put up in case, you know, you get assigned. But if you sell a put, or when you sell a put, you are paid to commit to buy Bitcoin at a specific price. If it drops to that price or lower between, you know, by the expiration date. I usually say between now and the expiration date, but again, with Bitcoin, it's only on the expiration date. So you have to be clear on that. Margin requirements, it depends. So some companies, depending on what platform you use, they use margin. The platform that I use is cash secured. So let's say you wanted to sell a $9,000 Bitcoin put. You have to have 9,000 bucks in there to put up as collateral, you might say. So you don't necessarily get to use leverage in the sense of margin, but there are other companies that you can use margin with. You could still make a lot of money though. I mean, obviously I prefer to use margin. I think this company is looking into adjusting that down the road. I mean, Bitcoin is one of those things, cryptocurrency is one of those things that's very much like not regulated yet. So that's important to keep in mind. There's not a lot of regulation. There's not a lot of exact, rules as far as Bitcoin goes. So that I'm sure is going to change, as time goes on. So when you sell a put, again, you don't need to own any Bitcoin. You choose how much you want to pay for Bitcoin if it drops to that specific price. And again, you also choose the expiration date, right? At which time that you will need to buy the Bitcoin from. And you can use, combination of these, of both of these strategies. So I have Bitcoin and I sell covered calls against Bitcoin. And I also sell, Bitcoin puts at the same time. So it's a very, very cool thing. Here's an example. Kind of like the example that we walked through on the call example. Let's say selling a put. Let's say you want to buy one Bitcoin at the end of the year, December, but only if it's a really good price. You can, and I took these numbers a couple of days ago from the platform. You can sell a December 18th, $5,000 put. This particular contract was selling for 200 bucks at the time. Basically, you get 200 bucks. So 200 bucks gets deposited into your bank account. You can spend that any way you want. You're paid 200 bucks to commit to buy one Bitcoin if the price goes to 5,000 or lower on December 18th. Now, again, it's European settle. What if it goes to 4,000 on December 1st and then it pops back up? It's only based, and this is the advantage. I think somebody mentioned this in the chat box. Is definitely an advantage, a big advantage when you sell. It's only based on the expiration date, the close at the expiration date. If the price doesn't go that low, you don't buy the Bitcoin, but you still keep the 200 bucks. I'm telling you, everybody should be selling options on stock. Can you tell I'm passionate about options? I think it's amazing. I think once people understand how it works, what's the worst case scenario? Let's talk about that. Worst case scenario, if you're selling a put, because I think worst case scenario is always important. Worst case scenario, if you're selling a put, is that in this example here, let's say on December 18th, Bitcoin is $4,000. Well, you're buying it at 5,000, right? Now, keep in mind that you can always buy back your position and not have the risk anymore. So in other words, you're not like etched in stone. You're not 100% committed as far as, when you sell a call or when you sell a put, frankly, you could always buy that back. It's kind of like stock options. Like, let's say Apple is $3.50 a share and I sell a $300 put, and then Apple goes down and I start thinking, oh my gosh, I really don't want to buy Apple. I kind of thought it was a good company, but now I kind of don't, and I don't want to buy it anymore. I could buy back my position. Of course, you might lose a little bit of money because maybe your position is trading a little bit higher than where you originally, took the premium in. So you might lose some money, but you have the flexibility to do that is what I'm trying to say. I don't know if this is an old question or not. What are margin requirements? So, again, some platforms use margin, some don't, and if there's no margin, it's just cash secured. So in the case of like a Bitcoin call, as an example, you own the Bitcoin and then you're using that as collateral. So you don't have to have any extra money. You just have to have the Bitcoin on that platform, right? In the case of a put, you have to have the cash for whatever strike price put you're selling. So like in this case, if you're selling a 12/18 $5,000 put, you have to have 5,000 bucks. But they do in fractions. So again, you can invest in options with as little as 100 bucks, like no joke. Really well, you can make $200 and buy the Bitcoin at a price that's like half. Exactly. So here's what somebody said, and I think this is so powerful. And this is what I'm talking about, people. Like when you understand how options work, this can be like the power of how options work. You make wait, where was that example? This example. You can make the 200 bucks. You get 200 bucks in premium, and what you're doing is you're committing to buy Bitcoin if it's half the price is what it is now. oh my gosh, like where is the downfall in that? Again, the only downfall is in December, Bitcoin's at 4,000, you're going to buy it at 5,000. Still, it's like 9,600 today. So it can be a very, very powerful, investment. Let's see, approximately 9.6% annualized, less commission. In this case, I didn't calculate it, but maybe it is. Let's see. I trust your math. $200 you're taking in, and you're putting up $5,000. So what is that? That's 4%, and that's over like 6 months or whatever it is. So yeah, I guess if you annualize it, you are annualizing it to approximately 9.6%. Very cool. So my money, 5,000 is committed till December. Okay, so that's a good point. Is your $5,000 committed? So in answer to your question, the answer would be yes. Well, it depends on the platform that you use. The platform that I use, you're cash secured. So that $5,000 is kind of committed. It's like in this, not available for trading. It's in like a holding account. It's kind of like having a savings account, and not being able to access it. But you can access it in the sense that you can buy back your position. So that's important to note. Okay. Hopefully that helps, but let me know if that didn't clarify. So you have to keep your Bitcoin on the platform. I assume you're at risk that the company may go under. Okay, so that's a good point. Brad said you have to keep your Bitcoin on the platform. The answer is yes. So in this particular case, I mean, and it depends on who you're using. The platform that I use, they're a U.S. company. They're super, super safe, super secure, CFTC registered. Obviously there's always going to be some sort of risk. A lot of that stuff is kind of like being shaked out now, you might say. Like for example, let's say if you have money in a checking account, you have FDIC insurance. Like if the bank goes out of business, your money's insured. Let's say you invest in stocks, and you're with a brokerage company. Most of them participate in SIPC insurance. If they go out of business, your money's insured. This is kind of the same case. I think, you'd want to do your own due diligence and make sure that they're a legit company. That, there have been sort of hacks where I forget, like Mount Gox, I think it was hacked quite a while ago, and people lost their coins on that exchange. So you are, obviously that might be a risk. In my opinion, I invest, like this, and I consider it, I think there's risk in everything, right? So you're always going to have some sort of risk, and you just have to figure out for yourself, is that a risk that I'm willing to take? Your $5,000 cash is just sitting there for 6 months and only making me $200. Yeah. I mean, in answer to your question, yep, the answer is yes, Lenny, but you're making 9%, almost 10% on your money. And it depends on, it depends on how you're viewing things. A lot of people have, savings money in the bank or something like that. Or a lot of people want to buy Bitcoin, but they don't want to pay $9,000 for a coin. This can be, you can look at it a variety of different ways. This can be a way that, you are able, like Linda said, you're getting paid $200 to commit to buy Bitcoin if it's half the price is where it is now. Yeah, and Linda says you still get the 9%. Absolutely. Are you making 9% in your savings account? Nope. And it's just another piece of your portfolio. You know what I'm saying? It's not for all. I don't think everybody should, hey, go out and put all your money in Bitcoin. I'm not saying that, but I'm saying that everybody should have a little bit of Bitcoin. That's what I am saying. Quadriga 2 in Vancouver last year. Okay, I never heard of Quadriga, but yeah, I believe you. If they went out of business. So that's definitely, for sure a risk. I mean, the safest way, if you do own Bitcoin, the safest way is in like a Trezor wallet or something like that. A cold storage, I think they call that. Obviously that's not applicable. When you sell options against it, you can't do it that way. That's just, how that is. And the reason behind that, and it makes sense. It's like, they just want, it's kind of like having collateral. So they want the collateral in their account in order to let you make that trade. So that's just part of it. Advantages. So let's go over some of the advantages. Number one, Bitcoin is 24/7 trading. So it's kind of cool, kind of like Forex. Stocks, on New York Stock Exchange, you can only trade between 9:30 and 4 Eastern time. Bitcoin, you could trade 24/7. That's kind of cool. You could trade in fractional pieces. So 100 shares equals 1 Bitcoin. So you can do like 0.001, which I think that's where I got my $100 from. So let's say Bitcoin is 9,600 times 0.001, right? It's, wait, is that right? 9,600, or maybe it's times 0.01. Maybe it's 0.01. Yeah, so it's like as little as 96 bucks. You know, that's why I put $100 minimum. Commissions are only $5 a Bitcoin. Again, that's going to depend on the platform that you use, but that's like, you know, approximately what the going rate is. Fractional commission, what that means is like if you're buying a half a Bitcoin, you know, you pay $250, you know, in commission. It's super, super cheap commission. I don't know why I have trading 24/7 twice. Sorry about that. European settled, like I said, European settled means that it could only be assigned on the expiration date at the closing. Currently no tax reporting. That's going to be based on the exchange that you use, the platform that you use. Again, I'm not suggesting you don't pay your taxes, of course, but it's kind of cool that they don't run and show everything to the IRS. That's kind of a cool thing. What do other people say about Bitcoin? So I just kind of Googled a couple things. Peter Diamandis, you know, most of you probably, especially the 20 people in the room, probably know who that is. He's very pro Bitcoin. At its core, Bitcoin is a smart currency designed by very forward-thinking engineers. It eliminates the need for banks. That's kind of a cool thing. Gets rid of credit card fees, currency exchange fees, money transfer fees. Did you guys know that Western Union charges like, I don't even know, 10% or something like that? Western Union is like one of those companies that a lot of like migrant workers would use Western Union to send their money back home. You know, they get paid cash and then they send their money back to their country. And Western Union can take, maybe it's not even 10%. I think it's like 20 or 30%. It's like, I don't know, it's like loan shark rates. Bitcoin is one of those things that you can use for a very, very small fee. Now, when I say that, you have to be careful on where you are. Like if you're buying Bitcoin on Coinbase, you know, you're probably paying way too much and don't even realize it. So really, like, you have to pay attention to that. But, you know, going back to Peter, what he says, money transfer fees, and reduces the needs for lawyers and transitions. That's kind of a cool thing. Who needs any lawyers? Hopefully there's no lawyers on the call here. All good things, right? That's what Peter says. Bill Gates, what does he say? Bitcoin is exciting because it shows how cheap it can be. Bitcoin is better than currency in that you don't have to be physically in the same place. And of course, for large transactions, currency can be pretty inconvenient. Totally, totally true. Banks, huh? Why does it take 3 to 4 to transfer money? Yeah, so you're totally right. Bitcoin is instant. So Bitcoin is like faster than a wire can be, right? So I depending on who you're using, and I would encourage people, like, be super careful on who you're using. I wired some money recently from my bank to a Bitcoin exchange, and I don't know, the wire had my business account name instead of my personal account name. Anyway, they didn't code it to my account there. And I'm waiting a significantly long time to get my money back. And hopefully I don't get burnt on it, because like I said before, Bitcoin is one of those things where there's not a lot of regulation. And this is an exchange that I'm talking, not the options, but it's something different that's not US based. Not that US is, you know, the end all be all. You know, but I'm just saying, be careful on who you work with. But yes, you're right. Bitcoin is typically instantaneous. Love his book, Peter Diamandis. Yeah, Peter is, I like Peter Diamandis, very, very forward thinking. Richard Branson, right? So while I think it's working, there may be other currencies like it that may be even better. Perhaps there are other cryptocurrencies, but in the meantime, there's a big industry around Bitcoin. People have made fortunes off Bitcoin. That's certainly for sure. Some have lost money for sure. Of course, it's volatile, but people make money off of volatility too. So, you know, there's definitely opportunities. So that's